If you are a buyer and you're really wanting to buy at the bottom of the market, you've missed it. Okay, because that was basically October, November, and part of December 2023. But it's not too late. Better contact me quickly. By the way, if you guys don't already know who I am, my name is Hussein Kabani, and I am your favorite broker. I basically work in the Durham area. We do cross over into Toronto, York Region, Peel as necessary, but we are a Durham real estate team and we do work with first-time home buyers. I actually really enjoy that. We work with move-up buyers, which I think there's a great opportunity for right now. We work with move-down buyers, and we also work with investors. So if you guys fall into any of those categories, if you're watching this video, I feel that you do, my link is gonna be below, and I would love to discuss your unique situation. We're just about at the end of February 2024, and we're in time for another market update. The back half of December 2023 got busy. Even houses that were sitting on the market that were not moving, all of a sudden got showings and all of a sudden got offers, some multiple offers even at that point. And it just continued into January. January, depending on who you ask, I think Treb said we were 37% ahead in sales. I did my own math. I thought it was 34% ahead, somewhere around that range, at least north of 30% more transactions happened this past January versus in 2023. And even when I'm looking at February, roughly we're about 20% more in sales versus the last year. So it's a good sign. Not only that, our inventory still has kind of stayed stagnant. I don't think we've really crossed that 12,000 unit mark. We've been kind of like high 11s into the low 12,000 kind of mark, and it's been stagnant. We haven't seen a huge push of inventory, but we've seen the buyer confidence, okay? I think they're starting to realize that they probably lost out on buying at the bottom, where I told you guys the bottom was, okay? October, November, and part of December. So now they're kind of having FOMO. They're like, I need to kind of get into this market. And what's not helping them right now is that as the fixed rates are still continuing to go down, our inflation number came in, it was lower, and it's also causing our bond market to kind of go down, which is adjusting our fixed rate mortgage products already. So we haven't seen the relief come from the Bank of Canada into our variable rate products yet, but we have seen them come down in our fixed rates, and our fixed rates are getting actually to being a pretty decent number. Now, if you have a mortgage at 1.5 or 2%, I'm sure you're not gonna agree with me that, 4.75 is a good number, but it's actually a pretty decent number if you wanna keep your payments consistent and get into a 5-year fix. It's not something I would do, but if you wanna have that security that it's not gonna change for 5 years, it's a pretty decent rate at this point right now. So there is a lot of buyer confidence, okay? Now, we've already talked about the fixed rates coming down, but we all kind of suspect that the Bank of Canada is going to be bringing down the overnight lending rate. Now that our inflation came in at about 2.9%, I think that some people are speculating that this rate cut might actually happen sooner than we were expecting. Some people are speculating that it's going to be in April, and some people are still kind of sticking to the guns and saying June, July. My opinion about this is that I personally don't think that they should be dropping the rate in April. It could be wrong, but I don't think they should do it in April. And the main reason I think that is because we already have a hype in the marketplace right now, okay? There's not that many houses available. People are already pricing the houses lower. We're getting into multiple offers with these houses, okay? Now, if the interest rate goes down by the Bank of Canada, I just think that we're gonna create even more of a buyer frenzy. We're gonna see price escalation go even out of whack. And I don't think that's necessarily a good thing to do in April, where we're gonna be right in the swing of the spring market. Now, I think that it would make sense to do it towards the end of June into July, where we've kind of ran through the spring market already. And then I think if they do it kind of in that summer month, instead of typically we see like the sales kind of slow down in the summer months, we might just see it stay consistent. And I think that's probably the best thing. I don't think any of us want to see the prices, unless you're just a seller in this market right now, want to see the prices get out of whack, guys, because the gap is just too big in my opinion, okay? Where household income is versus where the house prices are, there's a significant gap. And I'm just afraid that if we see increased price escalation beyond what the market is actually willing to support in terms of household incomes and debt levels and things like that, if the market was to come down, I think we could see a harder crash come down at that point. So I've always been a fan of like steady growth. I've never believed that real estate was a get rich quick kind of thing. And I think that if we have this steady growth, even if we have a turbulent time that comes up, we'll be able to swallow that a little bit better than the prices going crazy, and then we're gonna have a harder time to come down. Now, that's kind of what's been happening up until this point. I think moving forward, we are going to probably see more listings coming onto the market. We already have about 4 or 5 listings that are signed that are going to be hitting in the spring market, somewhere in that March, early April timeframe. So if we have these listings, I know there's some awesome realtors out there as well, and I'm sure they have some nice listings that are going to hit the market as well. The question will be is our buyer demand going to continue to grow at the pace that we're going to be introducing listings to the market? And that's going to really determine where the prices are going to go moving forward. Now, if you are in the market as a buyer that you're going to buy this year, and that's your goal in the next 3-4 months, I would encourage you guys to basically look at it closer right now. Get your pre-approval in place and just start looking now, because I think that the prices will probably still continue to go up. And I could probably say that safely for maybe the next 3 months, 4 months kind of thing. I think it's going to kind of be like that throughout the entire year. Can't be 100% sure depending on where things go. But I think that if you are going to try to say that, hey, I want to save or get the best deal as much as possible, try to get in earlier than later into the market if that's the right thing. Now, I've been discussing this more, I don't know if it's right for everyone to be in the real estate market. That's a decision you're going to have to make for yourself. You have to be comfortable with where you think the market is actually going to end up going, and you have to be comfortable with what you're paying and how much you're going to be paying every month to service that. And you also have to decide, like, hey, do I feel like the rates are actually going to go down? Like, we've done a video here with Vern before as well, our mortgage guy, and he's basically kind of said that, you know, this year we could probably see the rate go down to 0.75%, and then maybe even next year we could see it go down another point. But this is all speculation. So if you think that the rates are going to go down, maybe you're going to be better in a variable rate product versus a fixed rate, or you might still want to take a 1-year fix or a 2-year fix and then jump onto a variable afterwards. But do your research, find out what you're comfortable with. Number one, are you even comfortable with buying real estate? If you're one of those people that think that prices are going to go down, well, then probably not a good idea for you. If you think that they're going to stay the same or they're going to increase and it's something that you want to do is own some real estate, it might be a good time for you to get in and just decide on the product that makes sense for you. I think we're going to have a strong spring market coming forward. So if you are just a seller or an investor that's just saying, hey, I'm kind of in your boat here as well with 1 or 2 of the properties I'm looking at, and I'm saying, yeah, I've been feeding this thing like $1,350 a month, and now that I had to renew my mortgage, I got to start feeding it $2,000 a month. It's a property that I might just say, is it really worth it for me, or did I get my utility out of this property? I've refinanced it twice. The payment's gone up so much because of the interest rate. Is it really worth for me to service? Maybe not. I might be looking at dumping that one. So if you're a seller that's just looking at selling or an investor that's looking to dump, it might be a good time for you coming up as well, just to kind of get rid of that property. If you guys have any questions about this, because it's really different, it really depends on your unique situation of where you're at. You know, it depends on your income, it depends on your debt levels, it depends on how much it's costing you to service property. I encourage you guys to click the link below and contact me. I would love to just walk you through a basic conversation for 15-20 minutes of what your situation is and give you some detailed advice of what I think your next steps could be. Until next time, guys, remember one thing: get Cabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.